The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. This is the Tiger Technician's Hour. Dow's up 75 at 32,506. I like the action yesterday. I like the action the last couple of days. The day is very young, and we've still got end of month, maybe buying coming in. You never know, but that should start either later today or tomorrow, the next day, maybe going into early next week. But as I'm looking at it, I like what I'm seeing. I'm not major bullish. I'm just saying I like what I see, and I think that the market can push a little higher. I prefer that it's not just led by the Dow. I would like to see the NASDAQ actually running much better. It's not right now. It was the other day. Now it's suddenly stalled. I don't like the fact that the SMH's, I think Advanced Micro Devices is part of it, is down 4 at 247.70. That means this could be an alternate count, E/B. Right here. I don't want to do anything other than place it in on the chart. It is a leg D, possibly a peak E this week in the weekly chart, and that's going to be an issue that I need to monitor very closely. All right, let's go through the numbers. Let me go through this again. INDU, the Dow, Dow, which we have added to in terms of long positions, is trading up 84. The S&P is coming back a little bit now. It's only down 2.5. Was down 10 just now at 3975. You can see this Chapman Wave inside track. What a nice technique this is. Look at this. I just drew a trend line from the outer levels of the candles. We might hit a body of one, and maybe the wick of another goes a little higher. But basically, I'm looking at points of contact as really important. And then I draw a little, like 3/16 below it in this case, because it's a resistance level. I draw a little resistance area, and that just says we're now touching the red line. And that's kind of, it's important, but it needs very much to get into the body of this inside track. And that would say that, I'm just moving it. There you are. None of this is automated. It's all me. It means that this 200-period moving average of 4,000 needs to be hit. It needs to be hit today. I think that we're running out of time. We've already used up 4 sessions in the consolidation since leg C went to a peak C. My rule of thumb is 136. If it's just 1 bar rest or 2 bars, and then it goes to a new a higher bar or a lower bar, that's exactly what you want to see. If it goes to 3, well, that's okay. Once it goes to 4, 5, and 6, it says, wow, if it's going to really trigger another big move up, that's almost like a separate move. That D could then start to go E, F, and then alternate count, etc. So, yes, it could be good, but I prefer if today we'd see a move above yesterday's high of 4,003.83. That's a big ask. We're only down. We're at 39.76 right now, but we'll see. The day is young. So here we go. Dow's up 100. I like that. We're looking at the QQQ. This is what I was saying. Stalling here. Is this also going to be an alternate count? It really can't be. Well, this could be an inside a Chapman Wave. There we go. Yeah. That could be an instant restart. So that's E/A, F/B, G/C. But look how long we've taken. And then that would get to a D, and that would stall. At this point, I'm calling it a B, and that says the MACD is good, the stochastic is good at 79, it's just under 80%. The relative strength is weakening. You see the little gray line there. On-balance volume is very good, a little tad overbought, and the 9 is way above the 14. I like what I'm seeing, and that's all I can say. And looking at the weekly chart, you've got this, I took it away because it started to look a little messy. I'm going to have to put it back. So this is going to be my rectangle formation. Within that, we've got a lopsided cup formation, like a gravy cup. And that means you came sharply down, and now you're making higher highs and higher lows. And it says that buy, if I had to do a measured move, it says buy about April the 23rd or maybe later in April. We should be testing the high of, here we go, the high that was made the week of the 19th of August at 334.42. Oh, man, that's a big ask. Anyway, that's what I'm looking at if this is going to continue making higher highs and higher lows. IWM, the Russell 2000, I want to do this, and we've got a lot of stocks that we want to look at. Questions came in. I'll do them right now. IWM, nice move up today, up 67 cents to 174.35. But that daily chart and the weekly charts are very, very poor. I need to get to this quickly here. Gold, gold's given back some of the gains, still up 8 at 1962. My thinking here is that 1938 is going to be a test, so close under 1937 says it could go a little bit lower than that. Most importantly, what we're looking at is if you're looking at gold and silver together, you'll see that silver's holding way better. It's made a peak D and is up 0.03 at 23.17. And you know how I like to look at the gold and silver. Gold sometimes leads and then silver kind of lags, and all of a sudden silver looks around and says, oh my goodness, there goes gold, and I'm going to follow it. And it follows gold. Then it starts to actually act very well. Then gold's taking its time and says, wait a minute, silver's good. And then silver stalls while gold catches up, and then they both come down. And now what we're looking at is this consolidation in gold, and silver should go a little longer. We're also looking at the dollar. The dollar, let's see what it's doing today. Dollar is down. Oh, where did it go? Waiting for the dollar. Let's go. Dollar's not there. Let's look at the UUP. UUP is the dollar bull ETF. It's down 4 ticks at 27.91 after the doji candle peak D high around about the beginning of March. So, yeah, the dollar's really not doing very much. EUR, USD, got to get these out the way. Nice bounce, but it's sort of faltering here. That's the euro dollar, 1.081, up 0.002, making a cup formation. But so far, that cup formation isn't following through to the upside in the weekly chart. The monthly is starting to improve a little bit. And the USD JPY, that is the dollar bull, big pullback from that peak G doji candle around about the 4th or so of March, pulling back sharply to 130. That was the test, 129, and now it's at 131.09. It doesn't seem to have the strength to move much higher than this, maybe 132, 133. I don't think it can get to 133.89 in this move. That's the 200 period moving average. Also, what we're looking at here is I just want to do high-grade copper. High-grade copper is holding in that Chapman wave inside track repellent zone right there. It's right on the line. Can it get higher? Well, we'll see whether it does. But right now it's at 4.08, up 0.01, holding quite well considering. Now I want you to just go to the TLT. The TLT is bonds, the Lehman 20-year Treasury bond fund, down 2 ticks at 104.32. And that's just saying that the yields are still within a range. And as long as they're in the range, that's not too bad. They haven't broken out to the upside. That's the most important thing that we're looking at. But with the TBT making the second of a rectangle arch formation, so it's making an H to a lowercase m, I'm going to be watching this. This is basically the yield stuck at the 200 period moving average. If the yields start to climb to 20, it's at 29.05, 2.905. If they go to 2.987, that's a big gain. In the meantime, they're not. Dow's up 97. I'll be right back. Basil Chapman. A lot of stocks to look at soon as we return. See you in a moment.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, Basil Chapman. I just want to show you the 10-minute E-mini made this unusual peak G with the right side being much weaker than the left side at about 10 o'clock. When was it? Yesterday? 10 o'clock on the 27th. And then it pulls back, makes a cup formation, goes all the way to peak ABCD. Remember the Chapman wave, we're always looking for a buy signal to get upgraded to a buy mode so that you can go from peak A to B and then C and D. D is your objective. You can go higher than that, but D is what you expect in a buy mode. And then it turned down sharply, and it stayed in a very narrow rectangle until it broke out at about 2 this morning, went to peak ABCD. This is a 10-minute chart, and then it had another sharp pullback. And it ran up to the 200-period moving average, got repelled right at the 200, which was fantastic support all the way through the evening. And then what happens? It breaks down and goes all the way to 39.94, round number low. And now we're trading at 4,007, still right at the 200-period exponential moving average yet again. But this time the technicals are a little bit, they're building rather than my rule of thumb here is when the stochastic goes above 80% and then quickly turns down, you've got to be very careful. This way, the stochastic's running nicely, the on-balance one's working its way up, MACD is turned up, the histogram is positive, the 9 is just, it's a 10-minute bar, so I can't talk as if it's concluded, but the 9 has crossed over to make it green, and that's an important thing. And you can see here. Now, let's just get going because questions came in. Yesterday, I'd said I'd be a little careful of being in puts in the FXI. Am I getting this right? Yes. Here we go. In the FXI. There it is. And that's the China large cap ETF. And within that context, FXI, I said, I think that if I'm correct about the Dow rallying, I think that the FXI could also rally, even though it's looking very poor, but I think you could have a sympathetic move to the upside. And here it is, just pop to a leg C. So let me show you what we're doing. Can I put an up arrow? Well, the stochastics is 68, so I am going to put an up arrow. So it says that it should go to a D. There's your peak A. That's gray peak A, gray peak B, and today I have to confirm that it is a blue C, meaning we're in a buy mode, and that we should go to a D. 29.68 is the 200-period moving average. We're at 28.99 right now. I'm not sure it's going to do it in this move, but that's what I was looking at. Then the question came in, and I didn't get a chance to do. What a pity. Yesterday, Baba, that's Alibaba, which is also, and I said some time ago, I said, okay, Alibaba's made its big move now. It once in the 300s, plummets down to the, I think, what was that, 50 area. Then had a huge rally up to the 120s. Then it came back to this 80 level. I said, it might move. I want you to say that it might move with the FXI. I didn't get a chance to do that. I didn't know anything about it having a 6-for-1 potential split, or at least breaking up into 6 different parts. So this is gray A, gray B. We haven't yet got a confirmation that it's blue. I am typing in blue at the moment, but that's what I'm saying, that it is moving up very sharply. And these sudden moves, this is the moment that you can expect sudden moves. And it says it's going to be very confusing all around, because it looks like this is the big move, and it's not really. Because until we've got some resolution of the XLF, so the XLF was another question. XLF is the financial, S&P Financial Select Spider Fund. XLF, there it is. Nice pop-up yesterday, holding quite steady today, up 5 cents at 31.47. When you think that this is the whole this is the Spider Fund. This is the one that has a group of financials that are basically telling you these are the companies that the S&P considers to be the most important in the financial area. It does include Berkshire Hathaway. What did Buffett just do? He just added to Oxy again. So Buffett, with Berkshire Hathaway, look, it's still right at the 200-period moving average. It just can't get out of its own way. In the weekly chart, it seems to be making an arch formation. You can go to Bank of America. Yes, I said I'd look at Bank of America for Joe. Joe, this is the first time in ages that we have not been in Bank of America. We've been in for for at least 6 years. We've had really good moves in Bank of America for subscribers. This year, I said, I just don't like the action. I don't know what it is. I just don't want it, and we've stayed away. And it's gone from the 36 area down to the 26 area. I mean, that's a pretty big move for a bank stock. And yeah, all the bank stocks were supposed to have had the test. They were supposed to be able to be test free. They passed all their stress tests, etc. I don't know what's going on here. But if you're looking at the different banks, and I said I'd include Citibank. Look, Citibank, from the 53s down to the 42s. The monthly chart looks terrible. Did I put that in, Citibank? I didn't even put it in. So it's called Citigroup, I think. Yep, Citigroup. I should know that. Citi, is it all one word? Citigroup, yep. Group, Inc. Yep, it's an Inc. Yeah, this is lousy action. And you remember, we were looking at this some time ago, the bank stocks, and I said, I would feel way more comfortable being long and strong if the bank stocks were doing okay. That was before this whole panoply of blowing up. This is not good. And that's the reason why we're treating things as trade, but under the radar, we have some areas that we are in that I don't know if they can bypass everything, but I think they can hold much better. And that to me is really important. So yeah, JP Morgan was the other one. JP Morgan, don't type it there, type it right here. They're all looking the same. JP Morgan actually at some point earlier on had been holding better. Now it's had a pretty big move from the 144 area down to 123s. Now it's at 124s. Now it's at 129. It's a better chart pattern than the others. That's all I can say. So within that context, and KRE, which is the regionals now, this is terrible. I mean, for the regionals, S&P Regional Banking ETF, look at this one-to-one we've got on the monthly chart. Chapman wave parallel move to the downside. It's extended that. It's going all the way to the 41 area. It's trading at 44 right now. This is not a good sign. And that's the reason why I think you've got to be very selective. And we are still trying to be as selective as possible. Within that context, I just wanted to mention, someone said, what's that rule that you, Dan said, what is it? What was that rule that you said pertained to Schwab? Well, this is the rule. Schwab had this huge volume spike to the downside with the price, and it was a gap, and it was after big moves to the downside. In my work, that creates something that I call the Chapman wave price volume climax. I've been monitoring this for quite some time. And within that context, look, we ran up here from the 45 round number low on the 13th. It ran up, and my rule of thumb is that when that happens, it should, if the price can hold up the first few days and fill the gap, it can hold for 28 sessions without testing the low that was made, in this case 45 round number low on the 13th. There it is, 54, done 86 cents.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi folks, we're back and we're looking at the Dow up 70, the S&P's down 5. It's a real tussle here, bifurcated market as we look at different sectors working, some a lot are not working. Schwab, as I said, shouldn't go down to the 45 area in the next 28 days if this particular technique is going to work. So far it's held, hasn't broken 50 yet. It's at 54.25 right now, down 61. That's just the technique. Now, we did buy Schwab, and then we got out of it. I decided, you know what? As a rule of thumb, that's one thing. I don't have to have subscribers being the part of the experiment in this particular instance. When I see that Schwab is starting to hold because of other reasons, and that'll be technical reasons, then we can consider it. But this particular moment says just still be very careful. It is subject to the whims and fancies of that whole area. Question came in, could I look at the XLE for, here we go. Yeah, the XLE, question is, Basil, XLE back in a buy mode? Thanks, this is Baseball Eyeballs. You see how it came out of the Chapman Wave inside track propellant zone, which is now a resistance zone in the weekly chart, and the monthly chart made that H pattern, even though it made a fractional new high above the, what was it? Yes, 94 area, it went to just almost 95. So let me just show you how interesting these arch formations are. So back in 2022, that was in June, 93.31. Then it goes to a doji candle high of 94.71. I mean, within less than 2 points of a high of that previous high, and then it pulls back. And what I'd said is XLE cannot be ruled out as still being important in this market, but just on a purely technical basis, that H pattern, the dreaded H pattern in the Chapman Wave methodology of the weekly chart from the October-November high, and then fading just under it, says, just be careful. So here's the answer to the question. Because the on-balance volume has already been moving up since the low that was made, almost coincidental to the low that was made on the 16th of March at 75.36. You can see that it was a day before that the on-balance turned up. The histogram of the MACD has started to improve, and the MACD has finally crossed positive. Stochastic still weak at 27%, and there's a long distance between the pink 9-period moving average being able to cross positive. I'm going to suggest, because I know you follow it very closely, I'm going to suggest that at 80.47, you start a small position. That's not because I got major buy signals or anything, but the attraction of 82.03, the 200-period moving average, seems to me that it's in play, and that all it needs is to cross nicely above over the 322. That's the 22nd of March high of 80.81. That's just another 40 cents or more, about 40 cents from here. And that says you've started, wait a minute. No, that's an A. That started a leg B. Now, it's almost like the Dow. Look, INDU made a peak A, pulls back, goes to a B, and now it's struggling to get to that leg C above 32,761. I think it's going to try for it, but it's working very hard. So all I can say is, in terms of positioning, I would not say this is the big buy, or if you're still long from way down, this is the add to. I just say as a separate entity altogether, I'd look at it and say at 80.34, I'd put in 1 point. No, I'd rather give you a number. It's at 80.36 right now. Let's go to the 120-minute chart. Here we go, 120-minute chart. And I'll tell you where I'd put the stop. If I can actually find the 120-minute chart. Ah, there it is. Okay, 120. There we go. 120-minute chart says, let me just do this as a notation of the Chapman wave. So this is peak A, and it hasn't gone to a B. This is A, that's a B, C, D. So this could be A, B, yes. So I would make it's at 80.37. I would make 79.23, a $1 stop initially. But that's just because I'm treating this as a trade. If you are in, and it's at 80, now it's at 80.44. It heard me, and it just moved up 5 cents, 6 cents, 7 cents. 8 cents. So if you are looking at it right now, I'd have a trading stop. But if at any point it fills the gap, which it's going to do, and then moves into this candle right here, yes. If it actually gets into the body, is there. So it opened at 81.04. Yes, and if it gets to 81.10, I'd at that point I'd have a $1 trading stop, and just leave it like that. I'm not sure how it's going to work, because the MACD is good in the 120-minute chart. The 90 is over the 14. The stochastics at 77%, trying to get to 80%. But that's the way I would treat it, and I'd only treat it as a trade. This is not your big add to position. It could turn into that. I don't want to think of it that way initially, because it's an area that's been quite vulnerable to selling. And this is the first time we've had 3 nice big candles to the upside, and the day is young. So the Dow is now only up 2, S&P is down 15. So this is a very tight market. It is a challenge, and it's going to stay a challenge, I think, for a little while. I want you to look at, let me just see if I can move. Oh, what was the question? Oh, yes, the semiconductors. So this is a big deal. So the semiconductors is down almost 5 at 246.79. Because of the cup formation, because the high of the 2nd of February at 255.64 was a peak D, and because A, B, C, oh, I don't even want to think that way. So this becomes, oh my, 220. I don't even want to think that way. I should have written that in, that this is a potential Chapman wave unconventional flat base restart. Oh my goodness. All right, well, maybe it'll be, maybe it won't. But in the meantime, back at the ranch, woohoo, I'm going to there, and I'm just going to say, oh my. If that's a Chapman wave unconventional flat base restart, then the high that was made right here, let me just get my vertical, there it is. The high that was made here on the 2nd of February, with the MACD still rounding, the stochastic still over 80%, on balance volume spiking to a high on that day and then turning down. And the difference between the high that was made at 263.50, what was that again? 261.92. Let me just type that in because it's so important. 261.92. I looked at this and I thought, nah, surely not. But I didn't consider that was a Chapman wave flat base, a potential unconventional flat base restart, which says if it keeps going up, but then keeps coming down to the breakout level of the instant restart, there's a good chance when it finally makes a high, that high can turn into such a kind of high that says, whoa, be careful, I'm coming back all the way to the starting point of that rally, which is in the 220s. No, don't think that way. I'll be back in a moment. Basil, Chapman, Dow's up 2, S&P's down 15.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today And try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I was just writing this down. So, okay. Question about, let me just do it in order of questions that came in. So the VIX index, you see, this is, remember, within the context of all these different icons that I look at, like Bondy, Crudy, Dolly, Goldie, VIXy, this is the bonds, the crude oil, the dollar, gold, and the volatility index. For quite some time, I've said, I've liked to look at this completely separately. It used to be when the dollar was going up, gold would go down. When bonds were, when yields were going down, it helped the market. It used to be when the VIX was down, it helped the market. It used to be when you were looking at crude oil and the dollar, sometimes you'd see, even if it was just intraday on a 10-minute basis, if the dollar rallied, crude oil would go down. A lot of those taken for granted icons that we used have changed completely, and that's why I'm saying let's just think of them separately. So the VIX index is up 12 cents, woohoo, at 20.72. Let me tell you, if this VIX index at any point in the next 3 days starts to trade in the 2180 to 2230 area, this market is going to drop very sharply. So it's really important that the VIX, which is a go-to place as an insurance policy for many fund managers, is not seeing that concerted buying. It did see it 2 weeks ago. It popped to 38.81. And when you think about the market is held extremely well. I'll do this if I can tomorrow when I showed subscribers to my opening call, because I couldn't do my 1 hour or at least 45 minutes to an hour and 5 minutes weekend video with the overview of the markets and what we're looking at and why, etc. So I sent out this particular. Have I got it right here? Yeah, I sent. Oh, that was a mistake. I sent this out, and yeah, I sent this out because I thought this summed it up very well. I'll do more of it tomorrow, but I sent this out, a long note to say, are we matching? Is this the internal low that we made a couple of weeks ago with a big bounce, and now we're making a residual low? If it doesn't take out that low, this is really important. Now, this is, of course, Friday's close. There's a little bit of action that's gone on since then, but that's what I was talking about, and I'll talk about it a little bit more tomorrow. And that just says if we continue this whole rotational concept that started in the summer of 2010, where other than a couple of times where we've had the entire 90% of the stocks came down, tumbling down, are we looking at this rotation that says if you're select in your in looking at the different sectors of the market, there's a chance that we can muddle through for a little while longer because the Fed keeps on, or at least Yellen and company keep coming in to save whatever the issue is with the financials. Can we keep doing that? Or is at one point, there's one point where we're really going to pay the penalty? So all I can say, 20.69, I consider that to be at least reasonably bullish for now, but there's no direct relationship. NLY, which is Annaly, I think, Annaly Corporation. Oh man, I used to have this all notated because it was a stock that kept popping up for a long time. At some point, there it is. Look, it went from the 12 or 13 area all the way to the high 30s, peak A, B, C, and then it pulled back. The monthly chart, monthly chart right there, A, B, C, made an arch formation. Is it going to save itself? So the question is just NLY. So let me do this regardless of whether you're long, short, just looking at it, whatever. When you go into a rectangle formation after a major decline, what sometimes happens, we even saw that this morning. We had a pretty major decline from earlier, about 2 o'clock this morning, and then there was an attempt to go into a rectangle formation. And what happens with the rectangle formation, there's this brief moment where it actually takes out the left side low. That's where you start to see now is have the technicals been improving while that happened, so there can be a real quick recuperation, or are we still stuck in the rectangle formation? Well, it hasn't done that because it went to 17.55 on the 13th of March. The very next session, it popped up to 19.55. I would say that is a pretty big percentage gain, but not after you look at the way it's come down. Now it's just stuck in a range. This is where I say it's far more important to learn how to avoid than to be involved. So I would avoid the stock right now. I'd rather see strength where it starts to trade in the 1950-20 area and then say, hey, now let's see how it deals with that ugly candle from the 9th of March, was at 20.52. There's another way to do that. If it's now it's halfway into the wick, into the rectangle. If in fact it pulls back just a little bit more, and it can, I would say at 18.68 in the 1860s, because it's so close to the support at $18, that's where I would nibble, saying, okay, are you making the H pattern that says you've gone once, you've gone twice, and now because you're holding above the low that is really important, in this case the low of 3 days ago of 18.08, we can start to go peak A, peak B, peak C, and peak D within the rectangle. But rectangles can last a lot longer than impatience and cost you a lot more money if you keep thinking when it breaks down you need to short, or when it breaks out you need to buy, because it can stay in the rectangle. Those parameters are, they're like a go-kart, a little miniature, one of those bumper car barriers. So that's what I'm looking at. So you just asked me about it, nothing to say whether you're in or not. I'm saying I would not be, I think it's a bit of a waste of money right now to be in it. I don't see it breaking to the 20.50, 21.10 area, unless there's just something in the financials that really triggers a move to the upside. So Annaly Capital Management, Inc., trading at 18.95. I'd prefer to leave it alone. And if you want, you can have a nibble on a pullback in the 1860s. And there I would have like a 20-cent stop, an appetite stop. And then as it gets towards the high, as it breaks, if it doesn't do it today, but as it breaks 19.32, that'll start a leg D. If it hasn't taken that out significantly, I'd start to raise my stop and think about exiting, or just raise the stop and say, hey, take me out. But if you can go higher, that if it can close above the high of the 14th, 19.55, I'd say that's your first sign of strength, because the MACD is improving. Stochastic is at 40% improving. The on balance, there are a lot of things that are improving, but that pink 9-period moving under the 14 moving average, that says there's a lot of work to be done. Hope that helps you. Next question came in. Can you short Apple or NVIDIA here? Would you? Can you? Yes, anybody can short anything anywhere. But would I? I don't think so. Apple trading at 156.29, down almost 2. Here's how many patterns have we seen exactly like this? Is this an alternate count? I need to do a little bit of work, and I'll be back in a moment. I'll do some quick back. Tell you what. Basil Chapter, Tiger Conditions Hour, Dow's at 25. Is a time 12.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks, in this last segment, and thank you to, there we go, let me just look at this. Thank you to Megapi for mentioning that some of the lithium stocks are moving up. Oh, Duffy did as well. Good. So it's fascinating that you brought this up, because remember I was just looking at NLY. Look, NLY. Here's this pattern, this rectangle sideways pattern. I looked at these just over the weekend. In fact, I looked at the stocks within that group, and I thought, gee, they just kind of stuck, but they are holding quite well. But I never did anything because I didn't anticipate any big moves. So look at this LAC, which is, where did I type that? Did I type in the right place? There it is, LAC, which is Lithium American Corporation, or Americans. There's the rectangle. It's the same thing. And this is what you need to see. You see how it's popped out of the rectangle? And the MACD is just about to cross positive, hasn't done it yet. The on-balance volume is good. The stochastics moving up. So that's what you want to see in NLY. And look, even here, it hasn't yet, the day's young, but it hasn't closed above the rectangle high, which is this candle right here, the ugly candle, Chapman Wave Roman candle almost, of the 10th of March of 21.78. It's trading at 21.68. It hit 22.11. It's up 93 cents, up 4.46%. But that's what you want to see. This is exactly the chart. This is the daily chart. I'm not talking about the monthly or the weekly. Look, here it is. You just put in these trend lines, how easy it is to take your thing. You go to that point, go all the way down. I like to make it into a Chapman Wave instant. Oh, oops. There we are. Okay, so as I'm wrapping up here, I'll be back with Tom later on this afternoon. But what I want you to say is that the day is young. If after 1:30 the Dow is actually able to hold the plus 60s or more, as I said to my subscribers, and I do want to see the NASDAQ come back again. It's down. It's not good that it's down, all the SMHs. That would be good for a nice close